Welcome to 5 Good Questions. I'm your host, Jake Taylor. Our guest today is my good friend, Bogumil Baranowski. Bogey's a New York City-based investment professional with almost 15 years of experience. He's a founding partner of Sicart Associates, a boutique investment firm catering to families and entrepreneurs on both sides of the Atlantic and the Pacific. He's the author of Outsmarting the Crowd and a TEDx speaker. Today we're going to be discussing his book, Money, Life, Family, my complete collection of principles on investing, finding work-life balance, and preserving family wealth. Let's ask Bogey 5 good questions. But first, I'm happy to announce my literary debut, The Rebel Allocator, is now available on Amazon in both print and digital formats. You could say it's about time. I've been pouring my heart into this book for more than 3 years. A well-known SoCal billionaire received an early copy of the book and actually called me to say he enjoyed the story and was adamant that I get it made into a movie. Talk about a surreal experience getting 20 minutes on the phone with one of my heroes. My friend Tobias Carlyle had this to say: Jacob Taylor has written a modern-day investment classic. The Rebel Allocator is reminiscences of a stock operator for value investors. It's a fictionalized retelling of the lessons in The Intelligent Investor in an accessible page-turner. If you want to learn how to invest like Warren Buffett by sitting at his knee, this is the book for you. Wow, how flattering is that? I was blown away when he sent me that. I've created dozens of ad-free author interviews over the last 5 years and never asked for anything in return. If you've gotten any value out of these efforts, please do me a personal favor and pick up a copy of The Rebel Allocator. I promise you won't regret it. And now, on with the show. Welcome back to the show, everybody. My guest today is Bogey Baranowski, and he's the author of Money, Life, Family, my handbook. So, Bogey, thanks for chatting with us today.
Thank you for having me. I'm excited to be talking about the book with you, Jake.
And actually, welcome back, because this is your second time on the program, so we feel very honored.
I know, it's wild. It's been 3 years, over 3 years, and I spent those 3 years writing my second book just to get back on your show.
I wish that were true, but I don't think it is. So let's jump right in. Question number 1. How have your early life experiences shaped you as an investor? Because you have a very different background than I think a lot of people.
So first of all, when I was writing this second book, the first book, Outsmarting the Crowd, was just focused on investing. And the second book, I put a lot more of myself in the book, and I was more interested in sharing my own journey. How have I become an investor, and what were the events in my life that inspired me to take this path? And as you mentioned, my path has, as I realize now, has been different than the path that a lot of other people took. So first of all, I was born in Poland in 1980, when Poland was a communist country with a centrally planned economy, with apparently a wise group of people deciding what people need and at what prices they should be selling those products. So a hugely inefficient economy that led to shortages, which made me think that there's maybe more ways to organize an economy than that. And then when I was a teenager, the country went through a huge transformation. The market opened up, free market started, the shelves in stores filled up with products. And I realized that, there are two different systems. And obviously as a kid, you just observe and absorb what's happening and you draw your own conclusions. But it gave me a pretty good understanding of what the two systems look like and work. And also in the following years, I feel like I had the experience of 200 years of economic history put in a decade or two, where the economy opened up, businesses started, the stock market reopened, and it was a very new market that's been shut down since 1939 during the Nazi invasion. So for 50 years, it was completely closed. There was no stock market and no stock trading. So I got to see a lot of things that people just know from books. Early days of a new stock market, hyperinflation and a complete destruction of paper money, businesses being started and competition coming in, prices moving, changing, and bull market, bear market, and fortunes being made and lost in a very short period of time. So it definitely affected me and got me very curious about the way the market works and the way the economy works. Like, how does it all come together? And it wasn't one thing or one step, but I was fascinated with that period. I was fascinated with history. I loved numbers. And bringing those two things together made it more and more obvious that economics and later investing would be the right path to take. And it was really one book that you know well, One Up on Wall Street, that inspired me to use that curiosity to become an investor. In One Up on Wall Street, Peter Lynch talks about stock investing, and he explains that stocks are small pieces of businesses. So you get to own a collection of small pieces of businesses the same way you would if you had billions of dollars or if you had hundreds of dollars, which I thought was fascinating. So my life experience, my curiosity, my interest in numbers led me on that path to become an investor. And what I liked about it was that not only I had a chance to try to understand a little bit better how the world works, but in investing, I have a chance to put to work my ideas about how things should work and what kind of businesses will do better, what kind of businesses will do worse, and what prices I'm willing to pay for those businesses. And as you and I talked about that on many occasions, what I love about the stock market is that the stock market doesn't really care if you're young or you're old, if you're a man or a woman, or what religion you are, if you're experienced or not. The market treats everybody equally. You buy a share of Coca-Cola, and the market doesn't care. Coca-Cola doesn't care if you own the stock. But the truth is that if you're right about the price you paid, if you're right about the business, you'll get compensated. The price will go up and you'll get the dividends on the way. So the beauty of it is that everybody can participate, and I think everybody should participate and be a stock investor. And you don't need anybody to agree with you, which I really liked, because I tend to disagree with people.
So do you think that you're drawn to that kind of a meritocracy after seeing the opposite of a meritocracy in your childhood?
Yes, I do. And I like the idea that everybody can participate in the success of businesses. So in a centrally planned economy, all the businesses were owned by the government. The government made all the decisions. And in a free market economy, the economy that we have in the US, but now also exists in Poland, and it actually has proven to be the winning way of managing resources around the world, with very few exceptions, where the capital can get allocated efficiently. That's a way where not only all the consumers benefit, they get things at the best price possible, but also you as an investor, anybody as an investor, can participate in the success of those businesses. So if I own 100 shares of Coca-Cola, with the savings that I can have, I benefit from Coca-Cola's success over decades the same way any major shareholder would. So what it made me think is, yes, meritocracy, but it's also a very democratized way of participating in the success of businesses. I think it's a wonderful thing that the U.S. has a stock market. And I can't even imagine a world without a stock market, without the ability of people to be able to participate in the successes of the businesses out there. So it would be really sad to see at any point in history when the stock market ceased to exist, like it did in 5 decades in Poland.
So question number 2, what are the 3 types of remote that you mention in your book that we need to live to a good life and be a successful investor?
So the book has 3 parts: money, life, family. And the first one, money, talks about investing and the principles that I find help me pick stocks. So they're driven by value, contrarian approach. I'm trying to get the most value for the lowest price. Now, the middle of the book has been really a collection of lessons or observations that I had after leaving my firm of 11 years and starting a new firm, where I realized that I've learned a lot. I watched a big market crash in 2008-09. I felt it was a great learning experience, but I thought, what else can I do to become a better investor? And I don't think I'm smarter or faster than anybody else. I don't think I can process information quicker than anybody else. I don't think I can get any advantage through that. But what I did realize is that when I take a step back and I create some sort of a distance, first from my desk, then from the group thing, and then from the noise, and we'll talk about 3, I can actually become a better investor. So in a way, I can outsmart myself. I can become a better investor with all the resources that I have. So I realized that my best ideas don't really come to me when I sit at a desk. And now being a founding partner of an investment firm that works mostly with families, multi-generational wealth, I choose how I design my day and my work. So I realized that if I can spend a little bit less time tied up to my desk, and and actually be more outside and talk to people and visit companies and walk to a store and actually touch a product. It's amazing how many investments are made by people that never left the office, never visited the company, or been to a country they're investing in. And the tricky thing is that the more exotic things sound from the place where you sit, the worse your judgment will be, right? And sometimes you don't really have to travel across the globe. You can walk across the street and walk into the store of a chain whose shares you're buying to realize that, oh, there's actually nobody in the store. The selection is not so good. The prices are so out of whack. So it gives you so much more information about the company that you would have had you just left your desk. So I realized that my inspiration, my ideas come to me when I walk away from the desk. So that was the first idea about being remote from your desk. Now, with groupthink, the trouble is that we're getting so much information and noise to us every day from all the sources that it's sometimes easy to forget what is my idea, what is somebody else's idea. It's very easy to suffer from the fear of missing out. The stocks are going up, I'm not participating. And it's very easy to talk yourself out of an idea. And I always say that patience and discipline is the key in investing. And it's so easy to be subject to other people's ideas and get influenced by their opinions. So what I realized, and we'll probably talk more about, is that I tried to create a sort of a filter, a boundary for the group thing to affect me. I wanted to make sure that I make up my mind on my own and I don't get affected by other people's ideas. I realized that in investing, unfortunately, it's not something that you can do as a committee. So the more people you have participating in the investment process, the worse the outcome will be, because we're trying to find something that everybody sort of agrees with, which basically becomes the overall market. You're like everybody else. So to stand out, to be contrarian, to be different, you have to be on your own. I actually get less excited about ideas when people agree with me too much. I find something that I really like, and then I ask around and I realize, oh, everybody likes it, then it's not as compelling. I'm much more excited when I buy something that's half off, nobody wants it, nobody talks about it. There's a negative headline and a cover page article, how terrible the business is. That's when I get excited, because that's when I can see how there might be a potential disconnect between the price and the value, where I might be right. Now, the trick is that I might be right in the long run. The headlines are focused on the next month or quarter. So they might be absolutely right about the near term. Mm-hmm. But that creates a buying opportunity, because if I can focus on what can happen in 3-5 years, I can benefit. So now the last part is the noise, and it's combined with the outside opinion. It's so hard these days to run away from not really valuable information, but just noise. So I try to do my best not to check my stock prices, because we're all humans and we can only take that much poking, in a sense, right? If you hear that your stock is going down and down and down and down, we're all human. I'm not made of steel. So if I made up my mind and I like the stock at this price, I would rather not expose myself to too much of that poking to talk myself out of an idea. So all in all, the whole goal for me to become a better investor was to create a distance, both from my desk so I can get inspired, from the group things so I can be different and have my own opinions, and from the noise so I really stay patient and disciplined and don't talk myself out of silly ideas and into silly ideas because of the fear of missing out.
How often do you check quotes for the companies that you own?
Once or twice a week. There are sometimes days when I don't look. I look mostly at companies that I'd like to buy more of. Yeah. So I'm curious, has the price gotten better? And I'm less trying to prove to myself, oh, this stock is moving up, so I'm right.
Right.
I like to be surprised in a way that I check, oh, I bought it at 10, it's at 17. When did that happen? And I realize that I have to give my stock the time to find its way to the right price. And it's a fascinating thing, because I realize that I'm trying to play to my strengths, and my strengths are in-depth research and spending time with clients explaining what we do. And I'm trying to minimize everything else that can get in the way. So in a way, I'm trying to create an environment that will allow me to make the smallest possible mistakes and devote as much time possible to places where I add value. I don't really add value staying on top of every little gossip and news that's happening out there, but I do add value by pulling the trigger when the time is right to buy something. That's where I really can add value.
So question number 3, Warren Buffett has this famous quote that he's a better businessman because he's an investor and a better investor because he's a businessman. Like those two things influence each other. What do you think about the idea that you might be a better investor because you're a traveler and a better traveler because you're an investor?
I think that my curiosity starts at the desk, but it continues with me when I leave my desk. And you're right that because I think in terms of businesses I could own, when I travel, I also try to find out more about them. So when I take an Uber or a taxi, I'll talk to the driver and learn more about the world they live in as consumers and how they spend money. And you can learn a lot through people's stories. So I'm definitely curious when I leave my desk. And I travel around the country and I travel around the world. And I feel like what it gives me, it's an additional perspective on the world, because it's so easy to get this tunnel vision in investing, especially if you're in a major city, or if you're at some point you realize, oh, this is the whole world. But there's so much more to it. And it gives you a whole new dimension to evaluate your investment choices. Unfortunately, the more exotic things sound from the place where you are, the more willing you are to take risks that you're not aware of, right? If I told you, oh, there's this very interesting investment in Vietnam, I've never been to Vietnam, but it sounds exotic, it's far away, right? We all fall for it. It's that thing that investments, in my mind,
wouldn't that be the South Seas bubble?
Yes, exactly, because it was far away, unknown, hard to imagine, and you start to build all those tales to actually go and see, even if it's, as we spoke, across the street, just go and see what it's all about. So I do agree with you that it made me a better investor. I think it's the whole middle of the book, stepping away from my desk and seeing the bigger world and giving myself a chance to see the bigger world, because as a part of, the smaller firm that we are, 4 partners, I have more time to do things that improve my work as an investor.
How about the other side of the coin, being a better traveler? Do you think you're more engaged with the world because you are looking for investment ideas?
Absolutely. I love history. So whenever I go somewhere, I like to pick up a book and read about the city or the families that live there, and which is the third part of the book, the family. We work with multi-generational wealth. Our clients are usually the second, third, fourth generation of families that created wealth. And they switched from making a fortune to keeping a fortune, which is all a new collection of investment choices that they made. So I feel like that also makes me a better investor, because I'm thinking in terms of decades. So it adds to my way of looking at things. Yeah. Absolutely. But back to your point, whenever I travel somewhere, I'm curious about the wealthy people of the past that lived in that city. I'm curious about the businesses that are there. I'm curious about how people shop. What do they shop for? What their everyday life is like. Because once you leave, I live outside of New York City, but my life is in New York City. And I realized that a lot of people in New York City have never actually gone and shopped, or in a while they haven't done it, in an actual mall to see what it looks like. Mm-hmm. You drive up with a car, and because they order online or they go to local little stores. So they don't even see, and they buy companies that participate in the economy that's outside of this island. And things are different. People actually drive to stores. So there are a lot of things that are obvious to somebody that's outside of New York, not so obvious to somebody who is here. So it definitely makes me a better investor and traveler at the same time, just because I'm trying to stay curious and discover new things. But the wonderful thing about staying curious is, I mentioned families. Whenever I go to a new city, I want to visit homes of people that were successful and see how they lived and what they collected. And one little story that I can tell you, I visited a home of somebody in Madrid who used to be a publisher. And on one of the floors in the house, he had a collection of money. and these were coins, 2,000 years of money, and they were mostly gold coins. And it's 2,000 years of what we consider to be money. And it got me thinking of our recent experience with paper money being money. So he didn't even have any examples of paper money in his collection, because I think he knew already 100 years ago, or whenever he started the collection. He's long gone since, but that money is gold and gold is money. So there are little observations and things that you learn as you travel, and that kind of add another piece of the puzzle in a broader understanding of the world.
So question number 4, what are some of your best tips for insulating against the noise of the news cycle and the financial markets?
So what I learned when I left the firm where I was for 11 years, there was a specific week when I left, and I ended up with my flip-flops and my laptop on my couch, and I had no access to my old work email, no access to my old phone number, and I started with a fresh email of the new firm, Sicart Associates, that we started. And I realized that overnight I got cut off from all the newsletters that I signed up for over the previous 11 years. Some of them that people signed me up for that I didn't want to read. But immediately I wasn't getting hundreds of emails to go through, right? Then my news access got cut off because I didn't have my Bloomberg anymore, and I was busy doing other things than trying to keep up with the news. And my phone wasn't ringing because it was a new number. So I had a chance to realize, wow, if I could only create this, what people call now deep work time, when I don't have the noise, I can really focus on thinking, that really takes my productivity to a whole new level. And I took lessons from that period, trying to apply the same in my everyday life since. So I'm signed up to very few newsletters. I follow your videos, you know that, but you're on a very short special list. And I decided to follow less of the daily news, noise, nonsense, and spend more time on the long form. And I actually have, what I've been doing is I have a list of about 100 companies that I would like to own at some point. And I've been going and downloading their annual reports and reading their annual reports. These are companies that I've looked at. I might have owned them in the past, but I spend a lot more time on the long form. It takes a while to produce an annual report. It talks about the whole year. It talks about the ideas for the next year, which is not super long term, but it's definitely a step away from the daily up and down, end of the world kind of news flow. And I feel like we're at a peculiar time because the desperate war for eyeballs has gotten to those levels that unless the headline is in a complete extreme, they will not get you. Exactly, they will not get your attention, which creates an impossible setting for a successful, patient, long-term investor. You know, trees don't grow over time, and successful investments don't really happen overnight. We're sold that illusion that you go to the market to make money quickly. There's a lot of money lost in that thinking. The truth is that there's a lot of money to be made very slowly, but consistently over many decades. And the power of compounding will take care of everything else. You just let it.
So what do you think about maybe declaring email bankruptcy once a decade? Just, I'm starting over. I'm turning that one off and start a new one.
I think it's brilliant. I've noticed that I've been very disciplined about not signing up for things, not giving my email out as much as I used to, and unsubscribing from things that somebody subscribed me to that I wasn't subscribed to. So I actually get about 5, 10, maybe 15 emails a day right now. And some of them I ignore. They're not that important. But I really have the time to spend a lot more time on 1 or 2 or 3 where somebody asks me for something that's of value to them, that's important to them. And actually clients pointed it out how we as a firm have had so much more time for them to actually help in different situations or explain certain things. They say, how do you have the time? And I realized I'm not wasting my time on so many other things. And it's not just emails, but unnecessary meetings and everything else that's associated with it. All that to say that time is the most precious asset that you have, both to find ideas and spend time with clients. So do everything you can to put up a wall from all the noise out there. And it's harder than you think. Just to conclude, I gave a talk in Zurich last year to a group of investors, and I specifically picked a topic that I called unplugging. And I thought at the time, it came to the moment that I was giving the talk, and I thought to myself, I will either lose the entire room and I will never get invited again.
Yeah.
Or maybe there will be one or two friendly souls that will get it. And I explained what I just told you, my experience of, you call it email bankruptcy, but basically you're starting fresh and giving yourself a chance to catch some air and breathe. And I was amazed how many people in the investment world experience the same challenge. And they talk about time away, which I talk about, just stepping away from the desk and finding the time to think, to read. And it's very common. And it makes me think that the harder it gets for everybody to create that time to think,
bigger advantage.
The bigger advantage I have. Again, I don't have to be smarter or quicker or anything, just because I created a time to think for myself. So you can become a much better investor by doing a lot of, I'm not saying easy, but relatively simple things to do, and they stick to the discipline, and the difference will be there.
So question number 5, most family wealth was built from severe lack of diversification. You think about Carnegie, Rockefeller, Vanderbilt's, they all came really from one specific industry typically.
Yes.
But now, as far as maintaining wealth goes, how much diversification is necessary, do you think?
So it's a brilliant question. It's the third part of the book, the family wealth, which comes from the experience that we have. We manage family fortunes in the U.S., around the world. So we work with either first-generation wealth creators or people that inherited money. And it's fascinating to see the change in the mindset from making money and keeping money. So there are 3 things that come to play. One is the capital, the time, and the rate of return. Once you have substantial capital, a decent rate of return over a long time will double your fortune every 5-15 years, let's say. But that's an incredible growth. So you don't really have to take the risks to create the initial capital. So the third part of the book is really the essence of all I've learned managing family fortunes over the last 15 years, and a product of an extensive research that I did of the most successful families of the last 200 years. And I was very curious both about successes and failures. And the last 200 years have been an exceptional period in time where we went from land ownership and agriculture to industrial and service economy, and we've created much more wealth. I mean, it's unbelievable in the last 200 years. And that wealth became multi-generational wealth to be lost and to be expended on over the last 200 years. And I realized that there are a lot of exceptions, and then there are a lot of patterns and rules. Now, exceptions are interesting to read about and entertaining, but they're very hard to repeat. So there are a lot of one-off situations where, it shouldn't have worked, but it did, and the family might have still succeeded. Now, the rules to me are much more interesting because you can draw conclusions. You can see how the same patterns have repeated across cultures and centuries and across industries. And one of the things that I've learned is that a lot of families that went away from one single business and decided to hold multiple businesses, sometimes across industries, sometimes private, sometimes public. But these happen to be the families that dramatically improve the odds of success. Again, there are exceptions. There are enough cases around the whole world where the family, for one reason or the other, stepped away from one industry. And then if you expand the time horizon to 50 years or 100 years or 25 years, you realize that this might have been the smartest thing they've ever done, because the original industry they were in went through so much change that there was no chance, no matter how smart they were, no matter how smart the people they hired could have been, they could have maintained that kind of purchasing power or fortune in the original industry. So it's very interesting what you say, and it's that shift from making money to keeping it. And obviously, you can diversify and hold a little bit of everything, right? A total market ETF. I don't think that's the path to go, but there's a wide spectrum between owning a single business and owning 600 publicly traded companies. You can have a collection of businesses that have very high chances of growing and succeeding over time and compounding your wealth over time. So the beauty really of business ownership is that you have the flexibility to move the capital to the very best places that will serve you over the next 5 or 10 or 50 years. The one big thing that I learned managing family fortunes is that when you look at assets, they all have finite life. Even the best companies of today might not be around. We know that the best companies of 20 years ago or 50 years ago, they're not what they were at the time, and some of them are actually gone. But if you're managing a family fortune, they are infinite fortunes that are supposed to serve the family over many generations. So you have an immediate challenge. How do I make sure that this fortune has an infinite runway when I'm dealing with finite businesses? Obviously, there are exceptions, and there are businesses that have lasted over many generations. But the truth is that the odds are
really not as a base rate.
No, the odds are against you. So it really pays to reallocate your capital in better and better places. So that's the lesson that I've learned.
So a little bit more active than maybe some people might think, just because of that obsolescence risk.
Yes, these are not moves that happen every day or every month.
Yeah.
But it's almost like replanting the trees to the better place, right? You know that trees take time to grow, and you just have to pick a better place for your capital to continue to grow. To me, the fascinating thing, you mentioned Carnegie, but U.S. Steel was the first billion-dollar company 100 years ago, billion with a B. And until not long ago, it was, again, still a billion-dollar company 100 years later. So had you just held the shares of U.S. Steel, what it has become after Carnegie sold it, for 100 years, you would have been pretty much where you were 100 years ago.
Not real.
I know. So the purchasing power of the billion today, it's not what it was 100 years ago. So, but the business is still around. So you would have said, oh, but the business survived, yes, but your purchasing power is a fraction of what it could have been had you just invested in a selection of other businesses. And if anything, I think there's a growing challenge because the change is happening much faster than ever before, and businesses have a much shorter shelf life. People talk about the fact that a company could have belonged to the 500 largest companies for 2, 3, 4 decades, 50 years ago. And now we're talking about going on 10 years. So the company might not be among the largest companies for longer than 10 years, which is a very interesting challenge to have. So I'm not saying you have to trade every day, but you might not be able to buy and hold things forever, which would be easy and nice.
So bonus question that we have every time,
Yes.
and that is for a book recommendation. What do you got for us?
I have, as you can imagine, more than one book that I wrote down. So I have 3 books, and each sort of reflects each of the 3 parts of my book, Money, Life, Family. So the first part is about investing, long-term investing, owning businesses. There's a fascinating book called 100 to 1 in the Stock Market by Thomas Phelps.
Yeah.
And it was a book that was, I believe, out of print for a while, and it was brought back. It's a fascinating book because it talks about the long-term potential of investments. Because we're all talking about the 10%, 5% near-term, how much I can make. But what if you could buy something and hold it longer and turn each dollar into 100? That's a whole different mindset of investing. Obviously, I wish it was easy, but even if you can find companies that go up 10 times, 20 times, 30 times, one thing that you realize is that you have to give them quite a bit of time to get there, right?
Oh, yeah.
So you have to tolerate all the ups and downs that they will go through, all the cycles that they will suffer, right? So it gives you a whole different perspective of what it really means to grow wealth over time. So there's an updated version of the book called 100 Baggers, Stocks That Return 100 to 1 by Christopher Meyer that you might have seen. An updated version that is a study of few recent decades with the same ideas, I think, in the last 50 years. But also a fascinating read, same idea. It takes time for stocks to succeed, and it definitely teaches you patience. So that's the money part. The life part, the remote part, the finding a way to design your life better, to become a better investor or better at everything else that you do, is a book that I mentioned to you a million times. Your Money or Your Life by Vicki Robin. It's a book that was published probably 30 years ago and then republished recently in an updated version. But it's a book that talks about our relationship with money and how time is the precious asset. But she also walks people through the whole idea how beneficial it is to live below your means and save and invest in the end, which is all in line with my general philosophy. I think everybody should be an investor. Everybody should own a small part of this incredible economy. So her book, I think, can open a lot of eyes to a whole new way of looking at money that comes to your life and leaves your life, how every purchase comes at an expense that's much more than a monetary expense. It might be an extra 5 hours at work that you don't want to give up. So you're trading your time for the extra money. And investing kind of allows you to leverage your time because your investments can work for you when you're doing everything else. And the third book, as you know, the third part of my book is about family and the role of long-term multi-generational wealth in what we do, is Thomas Mellon and His Times. I don't know if you know the book. It's a book that was written by Thomas Mellon, who started the Mellon family and a lot of businesses around it. He wrote the book just for the family. So for many years after the book was written, I think for about 80 years or so, it was just meant for the family, very few copies, and they were actually collected and not to be distributed. And I think in the 60s or 70s, somebody ended up publishing it. So it's quite a gem to read. And it's not only a fascinating story of wealth creation and going away from one single business to multiple. He was really a venture capitalist of the day and investor in all kinds of businesses. But it's also a lesson in history because he talks about how much the world has changed in his life, transportation, railroads, fascinating things, because I look back and I think about how much the world has changed in my lifetime. And I can only imagine what he was going through. And I always think about my grandparents and their lifetime, what has happened from television and transportation and availability
airplanes
of airplanes and everything else, and to emails and texting and everything else. So a fascinating book that gives you an insight into building a family fortune. And when I talk about family fortunes, I think also of the fact that we're all living longer, right? So you don't really necessarily have to think about building a fortune for your grandkids. I think it might be an interesting challenge to build a fortune that will last until your late years of retirement, right? So I think we can all learn a lot about family wealth, growth, and preservation from the lessons of families that took the challenge of keeping and growing their wealth, not over a quarter or two, but over decades, through the ups and downs of what the market and the economy can serve to you.
Well, Bogie, I think that's a good place to wrap up. As always, it's a real pleasure chatting with you, and thanks for coming on the show again.
Thank you for having me. It's always fun.
Before you go, do me the huge honor of picking up your copy of The Rebel Allocator, available on Amazon in both print and digital formats. It's a business person's guide to effective capital allocation, told in a coming-of-age story of a college grad who crosses paths with a wealthy Midwesterner. It's fiction for the nonfiction reader. Thanks for watching. I hope you enjoyed this interview. If you'd like to support this author and purchase their book, click here. If you'd like to become a subscriber to 5GQ, click here. And I included a couple other interviews that you might appreciate right here. Thanks. Happy reading.